Hello traders, this is Currency Watch and this is Chris Keene from a keenpointofview.com. We had an interesting day of trading today where most of the majors moved up against the dollar in European and Asian trading but quickly lost those grounds once North America opened, and many of the pairs are resting near the lows of the days, at least except for the commodity crosses such as the New Zealand and Aussie, where the New Zealand managed to peak above its resistance zone and is now currently trying to form a base above that level. Let's take a look at a few of the pairs and actually see what we could have heading into non-farm payroll, because we could probably have range-bound trading until that point. The non-farm payroll, has economists estimate, would have a reading around 125,000. A beat or miss of that number could create a little bit of volatility in the markets, but it is hard to expect how much, knowing that the stock exchange are open, but many traders are still sidelined due to the hurricane that hit New York City. And non-farm payroll is difficult to trade at best because often the first initial move is retraced, and the second move is actually the one that is a catalyst for a beginning of a new trend. It is also the beginning of a new month, so we could see hopefully a trend of some sort develop this month where we could get a move in one direction or the other. Okay, let's take a look first at the Euro USD, just because you can see the Euro USD after moving up to test resistance yesterday and early trading around all the way up to the top of it at the 130.20 level, has retraced and has moved down towards the back of its range. What I'll be watching today or tomorrow would be for a move below this support line from the daily low around 129.20. And if we break that level, we could get a test at the bottom of the range of 128.25. And of course, if we break above this highs here in these 4 hours, we could see another move up towards the top of the range between 129.95 and 130.20. If we happen to get some sort of blockbuster number and we get a move out of these ranges right above the 128.25, we could see a move down towards the lows for the month, but for last month, actually October, that come in actually between 128.25 and 128. You can see right there that would probably act as support, and on the top side, any move would probably be find resistance between 130.60 and 130.80. The next pair we're going to look at is the Aussie USD, just because you can see this pair tested once again the top of this resistance zone between 104.10 and 103.96. Until the pair can break above this resistance zone or below this resistance zone, we're going to probably just have range trading. Any move above 104.10 could open the path up for a move up towards the 105.20 level. But if we do get a break below this, below the lows for the week right here at 103.25, we could see a move down to test the 102.50 level. I have this trend line written on the chart, but I'm not really actually trading off it after the trade. The pair has had a few false breakouts on either side of this ascending trend line, so I would be looking for this line maybe to cause a little bit of a stir, but any move down to it would probably break to the 102.50 level. Let's take a just look at the Great Britain USD. As you can see, the pair is sitting just about mid-range after moving higher today. It has support at support starts at 161. If we break below that, then we could be off to the races to test the 0.382 fib at 160. Resistance is firm between 161.80 and 162. That's what I'll be watching heading into the non-farm payroll tomorrow. Everybody, good luck trading and have a great weekend. This is Currency Watch, and this is Chris Keene from a Keen Point of View.